Hi, everybody. We're back for a couple of stocks we've been tracking. And don't forget, we do have a NeoVolta CEO special premiere, special interview coming up in the next couple of weeks. So you got to hit the like and subscribe so you're notified, and the bell, of course, so you're notified as soon as it drops. And we have way more cool stuff happening, a special Halloween episode happening as well. So let's get right into it, the stocks. And I'm just going to apologize right now to Carlos because I'm going to eat my words. And we're going to talk about Hertz, why this could be maybe a double. Let's get into it. So this is where I eat my words because it looks like even the CEO came out and said he was thinking about autonomy in terms of these purchases. I still don't think it was the main factor, but the fact that he said it, I just have to eat my words or eat my hat, whatever the saying is, that Carlos, you were right. And you know what? I might be buying a little bit of Hertz because this chart is looking spicy. All right. But just to go back and show what Carlos said, when I'm wrong, I'm wrong. That's it. I'll admit it. Let's do this.
I don't even know what you call this, the second IPO price. They've been hovering around this after they launched in July, fell to about 16. Now they're back up to 28 again, and now this news is they're not even back to where they second IPO'd at. So if you believe in Tesla and you missed the boat or you believe in ride sharing, this could be a really good play. I can't see what their market cap
Hertz is a great play. I don't think so.
I'm going to go on record and say I think it's
Well, we'll bring up the chart. I want to discuss it. It does look bullish, actually. Okay, besides the chart, I do think the chart looks bullish, but I was against investing in Hertz at all, even for the long term. So would I invest in Hertz for the long term? I probably won't, but still I was wrong. Hertz does seem to have some sort of strategy because today they released some news, and this is what I want to go over. So the stock is sitting at $27, and obviously they had this massive run, a big dump, and now they're hanging around this price that's under $30, right? The market cap, it says, is 12.8 billion. And if you remember, they were basically bankrupt. So this is kind of amazing that they're even at this level, that they can reinvent themselves. So that's why I'm even giving it some possibility that they might not be a fly-by-night operator because they're trying their best to change the perception of Hertz, right? They're trying their best to change their perception and other people's perception of them as an old, stodgy company. Literally overnight, they're a young, modern, hip company buying Teslas. And on top of it, what really made me bullish and sort of go, hey, what's going on here is that Hertz is partnering with Uber and Carvana to offer Tesla rentals. So 50,000 of their vehicles, I'll leave a link to this article, but 50,000 of their vehicles are going to be used as rentals in ride sharing for Uber and Carvana. What I think happened is that Hertz made a deal with Uber and Carvana before they knew they were going to even buy, or during they were going to buy these cars, that we're going to buy 100,000 vehicles. You need to rent vehicles. And maybe Uber said, we need to rent a bunch of vehicles. So if you buy the Teslas, either way, they're buying the Teslas. The other thing is, I think Elon Musk and Tesla are basically funding this operation because remember, you get a loan from Tesla at 2.5% or so. So cheap money is funding these cars for Hertz to buy them. And now Uber and Carvana are paying basically the monthly fees and more. Obviously, Hertz is making a profit on these cars. So Hertz and Carvana are going to be paying these monthly fees because I think it's like 300 and change for a Tesla a week that they're going to be renting it to these drivers. So that means times 4, it's like around $1,200. And that should cover the actual payment plus Hertz's margin in terms of them making a profit on each car. And all they care about is a profit, right? Whatever that is, whatever they're looking for is a 10, 20%. So this is sort of a brilliant 3D chess move on Hertz's part to work out these deals, buy these cars where everybody knows that these are popular cars. I'm giving a lot of props to Hertz for doing this. And I'm eating my hat. I may be buying a couple of shares here in order to play this next rally that might happen for Hertz. This is a big if. I just wanted to cover it to put it out there. You guys can decide what you think is going to happen, but this is what it looks like to me. So this won't be too detailed of an analysis because I'm just going off of based of simple charting patterns and what happens when you reach an all-time high and you break out. That's it. Nothing special here. So it looks like the resistance is around $30. And what that means is that if it breaks $30, then we can possibly see the stock run. And usually that run is maybe from the bottom of this, which was 15 to 30. So I would expect it to double again. So if I was to say this was a double, $15 doubled to $30, we might see from $30 to $60. possible, or at least 45. So let's say it's in the range between 45 and 60. But if this breaks out of the 30, because like I said, the fact that it was at $15, it doubled and went to 30 might mean we have another double in store here from 30 to 60, which is very possible, especially for a $12 billion company. This is trading on the OTC. It's illiquid technically. So that means that it can have a run up even beyond 60. But let's say I just wanted to play it for the short term. I would say as soon as it breaks 30 and not before, unless you want to live dangerously, of course. But after it breaks 30 and it's comfortably above here, look, it can fail. This is what's important. That you guys should not do this if you aren't comfortable. And this is not financial advice. If I do it, that's my choice. So I'm thinking after 30, maybe 31 bucks, I make sure that we have a clear breakout, and maybe even 32 bucks because it's a double. So I don't have to go exactly at $30.05, right? So after around $31, $32, I might say it's time to go in. I might put some small position, 100 shares or so, maybe 200 shares, who knows? Depends how saucy I'm feeling that day. And I expect a run from 45 to 60 at least to happen. So does that mean it has to happen? Of course not. But usually when there's a nice breakout and it's touched a couple of times, here's 1 point, here's 2 points, here's 3 points. If it breaks on the fourth one, then I know it's an actual break. And this is why I say wait till past 30, 31, 32 being comfortable, because if it fails this trend line I have. So take a look at this trend line real quick. You can see this trend line sort of goes all the way back here. Now, if it fails that and it breaks down, you don't want to be part of this at all if this is a short-term trade. If you're just bullish on Hertz, go ahead, buy some Hertz for the long term, because Carlos may be right that if Hertz is thinking about autonomy and Hertz is thinking about, let's say, all these partnerships that they have, maybe it's Uber right now, but it could be Lyft later and all these other car companies and taxi companies. Hertz might be the provider for this ride-sharing taxi service, autonomy, who knows? Honestly, it's a bet on the future. That's the point, right? At $27 in a market cap of 12, I think it's 12 billion. Let me go to the market cap. Yeah, the market cap, 12 billion. It says they have a forward PE of 9. So they're technically profitable again, whatever. From bankruptcy to profitability, whatever happens. Either way, I'm actually not investing in Hertz for the long term, but in terms of just doing the short-term trade, making a double, even 50% up, it seems like a decent trade to make. The thing is, if I was stuck with the shares, I wouldn't care because it's going to be a small investment in my portfolio. So if it does fail at 32 or 33 or 34, I'm not selling it. It might fail and it might go below here again, and I have to hold it. So I'm not a day trader, so I'm not trying to just do a day trade. This is more like a swing trade. So even if it fails now, I'm thinking maybe there's a bullish thing that happens as they get the cards delivered later on. That's also possible. And it might be a good long-term play if I had to hold the shares, but that's not my objective here. I really just want the double and I want to be out. Let Carlos hold the shares. Okay, so here's the chart of Doge. It's the one and only Digo Double G. This is purely a chart thing. This is all spec today, apparently. So I'm not even going to the high quality stuff. I'll end this with Enphase though. So we'll end it on an actual good quality company that everybody should invest in. But I felt like, let me just cover some of these really speculative things that are happening in the market. And I don't want people to get dangerous and start investing into those. This channel is not about gambling. It's one thing when you take less than 1% of a portfolio and you mess around with it, let's say, because you have itchy fingers and you got to do something. And it is looking pretty good because it's coming on this massive wedge. And this is against Ethereum, just to point this out. We always look against Ethereum for these kinds of altcoins. So this is Dogecoin versus Ethereum. This is not versus USD. So that doesn't matter to me. I'm looking at this chart because as this gets lower and it reaches the end of sort of this wedge, it has two choices, one to break out, obviously, and one to fail. And if crypto is going to be bullish in November and December, which is very possible, I'm betting that it is, obviously, but you guys have to do your own research. I'm betting that crypto will be bullish. Dogecoin might pump. And honestly, it could pump back to these levels. So if I was to draw a line, this would be my maximum exit point. I'm not saying I would last there. Maybe I would aim for even this guy right here. So this is against Ethereum. I would need to go against 0.0001557 Ethereum. Okay, so that's for every Dogecoin. And this is the max I would go to, meaning that I don't think it'll it'll blow past this line, which it very well can, but I would never be in this trade that long. So I would wait somewhere in this range. Once again, just like in the Hertz trade, I would only do this for this one. And I'm sorry for those who are watching this channel for only like long-term investments, but occasionally I do a swing trade and I feel like it's a good opportunity and I take a small bit and I dump it into the market, in whatever market, the crypto market, the stock market. I take a chance. Sometimes it works out, sometimes it doesn't. On the ones that it does work out, remember, you could make 3 to 10x in some cases. And the ones that it doesn't, you got to make sure to actually exit if you want to exit. So Doge in terms of USD is 23 cents, market cap of 30 billion, obviously worth it for a coin that does nothing. So this is not we're not arguing about Doge's merits in terms of it being like the future of crypto, about an exchange between regular folks and people. Listen, that could go on another channel, fine. We're just talking about, can Doge pump and make us some gains here, right? So that's all we're talking about. So at this point, I expect it to pump. I'm watching this very closely. I might put a little bit in and like I said, sell out at this range. Okay, guys, let's end this on an actual quality company. I'm sorry for all the Hertz lovers and Dogecoin lovers, but Enphase is my baby. And today my baby grew up, okay? So we're up 25%, even a little bit after hours, as you can see. $216. I've been talking about this stock for a long time. It's been a year and a half. And their earnings killed it. This is why they just took off like a rocket ship. Now, everyone's watching this price and they're thinking, it's up 25%. Why would I ever buy this stock? Okay, you guys have to just understand. Market cap at $24 billion. It's not even at its all-time high yet. If you believe what I believe, you don't have to. Not financial advice. But if solar is a real thing, as I keep saying, in fact, I'll include a link to a video going in depth on Enphase. It's going to be somewhere up there, somewhere down there. America is 1% covered in solar. And forget about microinverters. There's other companies like SolarEdge that are also competing, of course. So it's not only Enphase, but if you think solar is a real thing and you think it's growing and solar is going to be on a lot of people's rooftops, more than 1% of this country and every other country in the world, if you believe that, then this company is undervalued for the long term, not today, 5, 10 years out. I'm willing to wait for that 200, 300 billion, who knows what else, honestly. Maybe this is a $1 trillion company, but we don't even need that. This is what's crazy. You're getting in at 24 billion. The company's already established, okay? And you might still have a 10x. So this is what's crazy about it, that you are still getting in at the point where it can go 10x. And further, but forget about that. 10x is really good, right? You put in 10,000, you get 100,000. That's my point. So anyone who thinks that the run is over for Enphase, look, it might be short term. That's true. You might wait for a pullback. Go ahead and try. But if I had no Enphase, I would always be dollar cost averaging into Enphase, always. In fact, it ran up so much that I sort of missed getting it a little bit sooner because I was waiting for a bit of a dip. And I'm already in this position and I still want more shares. Of course, at some point you run out of money too, right? Basically, $216. I might even be buying some more shares pretty soon just to DCA in. Anytime I get some liquid cash, I might be DCAing in. And this raises my cost basis, but what do I care? I think this is minimum. Let's say it's a $100 billion company. I'll do some quick math. But once again, if this is a $100 billion company divided by the current 24.16, we have a 4.13 times the current share price. It's $894 a share. So this is like my bear case, okay? This is where I might sound like a total bear, but I think $900 is like the minimum I expect to sell a share of Enphase for in, let's say, 2025 or whatever. Look, if I'm off a year, do I care? No, because this is going to be a $900 stock at some point. And if I am wrong in terms of how big solar gets in the next 5, 10 years, you're talking about, is this a $200 billion company? So now just double this. It's an $1,800 stock. Do you understand how early you are into a company like this? I don't know if I can make it any clearer. I've been talking about Enphase with Carlos probably when it was like 20, $30. So, and I'm still buying it. You can't see what I see, then I don't know what to say anymore, but this is such a high quality business. It's crazy. SolarEdge too. I don't have any SolarEdge shares though. I do want to start a position, but that's another one just to keep on your radar. And I will do a deeper dive into SolarEdge at some point. Enphase Energy EPS beats by 11 cents. It beats on revenue. Okay, Enphase Energy Q3 non-GAAP EPS of 60 beats by 11 cents. GAAP earnings per share of 15 cents beats by 1 penny. Revenue of 351.5 million, which is 100% year over year increase. That is crazy. This company is growing fast. Even if it was growing like 40%, like it would be worth buying. But the fact that they grew 100% year over year, I mean, this is ridiculous. Let's cover another thing that's important that I might not say it here, but the company shipped 2.6 million microinverters, it says, or 913 megawatts DC, 65 megawatt hours of Enphase storage systems. Okay, so let me just go over this. Enphase has shipped 2.6 million microinverters this last quarter. But starting, I think, at the end of this year, they're going to be capable of doing 5 million microinverters. So in their quarterly report, that's what they said. They can go up to 5 million microinverters. That would be bonkers because now they're doubling their production of microinverters. That's what it seems like, almost doubling. And correct me if I'm wrong, but that's the way I read it. And we're going to go deeper. We're going to do a deeper dive into the actual quarterly and listen to the call. But so far, that's what I'm gathering from it. The other thing that's important is the Enphase storage business is growing, and they can't even keep up with demand of that. So I think they have 14-week lag time for the storage. My point is that this company is growing gangbusters, all right? We're talking about 40, 50, 60, in some cases 100% year over year, that this is a crazy business that's profitable. I don't think I'll lose any money in Enphase. Let me put it this way. And I sleep very soundly at night, having as much of my cash in Enphase. High quality business. You guys have to be in it. The chart. This is very interesting because I've been talking about this chart also for a long time, and it failed its long-term uptrend. If you look at this trend from my previous videos, which I'll link, there's a 4-year trend. And I even said in the other previous videos that every time it's underneath the 200-day, which was right here, that it is a buy. And I had these orange lines in a previous video and whatever that shows it under the 200-day. The RSI is low. So if you check this, 200-day, RSI is low. I was buying heavy. It means it's probably going up. Did I realize it was going up this high? No. I thought it was in this wedge and we were going to play out this wedge for a bit and we were going to stay in this channel basically, but we broke up massively after this earnings. So if you look where we are back in the bull trend, the basically the 4.5-year trend of Enphase. I want to quickly show the whole thing. Let me go to the monthly. So basically, okay, this is a monthly chart. We've been in this uptrend for over 4 years now. And when it went into this wedge right here, I figured, okay, we might go sideways. Maybe Enphase has run up too much. And as soon as these quarterlies came out, it ran right into this uptrend again. This is insane. If this holds, you guys, I don't know what to tell you if this holds. I can't guarantee that this holds, obviously. I'm not Nostradamus like Stephen Mark Ryan, who apparently is Nostradamus, but I'm not. So this is the daily chart. I just want to cover this real quick. I showed you the 4 years that this has been in the same trend, and now we're back into it after taking a detour for a couple of months. I just wanted to show you how crazy this is that we are back in the uptrend, this 4-year long-term uptrend of Enphase, that if we stay here, it is possible that we end the year or begin the next year, begin January 22, somewhere there at $274 approximately. And if it's just crazy and the market rips for some reason, if the EV tax credits come on and any solar credits are there, and just like the infrastructure bill is passed, if all these things start to happen, I mean, this could technically rip to 400 and change. Like, having a double from this point on is not impossible. I'm not saying that it's going to get there, but my bags are packed and I'm ready to go to the moon, as I said in the last video. Okay. So if Enphase wants to go there, let it go there. I might be a seller a little bit at that price, maybe at 450 to here's the upper range, by the way. It's $800 is the upper range. I don't think we're going to get to the 800, but look, if I've seen crazier things with Tesla 2 years ago. So if this decides to rip, then honestly, I'm sort of a seller of some shares, maybe a 25% of my position or something. Because remember, I do believe Enphase is like the 10, 20x. I believe that already. So if it starts to hit this January 22, I mean, it's crazy. It's a little too fast, I would say, for me at least. Okay, guys. Well, that covers all those stocks. Some speculative stuff. Okay, so I apologize to Carlos. Sorry, buddy. It seems you were right. I'm wrong. Hertz is not a bad bet. I might be buying some. And Doge, you're right about that too. I might be buying some Doge just because I see some upside potential in that. And lastly, Enphase is still the bomb. It's still worth it. Even if it's up 25%, where else are you going to put your money that's that good of a company? You let me know in the comments because I would really like to know. I want a better company than Enphase if you have one for me. The other thing is we do have a NeoVolta and we have a part 2 coming out for the FUV interview. We have some other stuff happening. So please like and subscribe and hit that bell, and we'll see you on the next one. Thanks for joining us.